Has it started recording? All right, it has. All right, guys, welcome back to another Sunday market breakdown. We're going to break down my $15,000 trade that I took last week. Um, and yeah, I'm just going to answer some quick Q&A session questions with the team before we get into it. Just reading through them right now. Yeah, I am thinking of getting into futures and things like that. Because like I said, with the CFD prop firms nowadays, there are only a handful of prop firms that are going to let you sort of leverage them the most, which is the reason why I'm looking to sort of potentially not fully move away, definitely still stick to the CFDs, trade gold, things like that. But just to expand my portfolio, maybe I would look to, expand it maybe to the future side of things. Um, yeah, kind of going that way. Even stocks I was looking at just a bit, out of interest. Let me just read the chat before we get started. And, no, the prop firm passing is a whole separate thing. It's another team that runs that. You never go back to other props when you switch to futures. Interesting. I definitely will look at that. Tradeify. All right, definitely. I'm going to look back. I'm going to ask you guys some more questions regarding futures later on. Appreciate the help so far, but we're going to get into the breakdown now, and then we will go through a bit of a Q&A regarding the charts, regarding the trade ideas, and then yeah, we'll finish off with because I am definitely interested in futures. So yeah, we'll get into that. But anyway, getting back to the breakdown right now. So with gold right here, this was a trade that I took yesterday. Sorry, not yesterday, Thursday. Thursday? Yeah, Thursday, 6th of Feb on my funded account. It banked me $15,000, and that is a basically 7.5% gain. I was up around 8%, but I had to check Forex Factory just to make sure it wasn't any news things that I was violating, which I wasn't. And this is a very, very nice trade. I was only risking, I think, 2,000, no, 2.5%. So 5,000 to make 2.5% risk to make what was it now? 7.5%. So it was just less than this. It was like a 1 to 3 point something. I closed out around here. It's actually a 1 to 4, sorry, risk to reward. And yeah, we're gonna break this down right now. So as you guys know, when it comes to the higher time frame with gold right now, and let me just check back with the chat real quick. Okay, cool. So yeah, like I was saying, with the higher time frame on the daily, the gold has just been flying bullish, 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 bullish. Right. On Wednesday, prior to the trade that I took, we had nothing different, to be honest, on the daily side of things. If you look at this daily candle, what do you see? Normal, a little rejection at the top. We had a little rejection here before, So it wasn't like a big, big difference, but I knew that we were at all-time highs. And sometimes the market will do some different things in terms of trying to catch the traders out. Because if you were just buying, yeah, you could technically be up, but the market makers, institutions, whoever you believe runs the market, usually do try and play a few tricks to try and catch you out, and obviously run on stops and things like that. So on the 4 hour side of things, even prior to my trade, in fact, what I'm going to do before I even mark my trade out, I'm going to go and put it in replay mode so you guys can see exactly what I was looking at. So up until this point right here, what was I thinking? What have I seen? Now, on the 30-minute time frame, there's no need to really check the daily, the 4 hour, or the 1 hour so much. I mean, the 1 hour you can see as well a little bit. But if we look at the 30-minute, because this is like the medium level time frame that I was looking at to confirm a few things, what do we see here in comparison? If we look at this piece of price action here, what do you see here as this higher high, right, in the overall trend? That's different to everywhere else in these previous highs, right? Even if we're going to compare this section here, let me just in fact grab it so you guys can see what we're looking at here. This right here, do we see it here? No, because over here the market made higher high, higher low, lower high, lower low. It wasn't as similar as this, right? The market had already made a higher high, it's made a higher low, little lower high, lower low, but it's kind of moved to the upside already. And I mean, it did give a little reaction, but it still continued to the upside. It didn't start like how this started. What we see here is a simple, one of our favorite head and shoulders patterns. And you want to look for head and shoulders usually, exactly, the chat's got it right. So you want to see a head and shoulders at the end of an uptrend, because this is what a bearish pattern that you'll expect in the market. Now, if we flip this upside down, if I can do that correctly, think it's on I. No, it's not. It's Control I. Butchered it. I don't even know which one it is. But either way, upside down, this is basically an inverted head and shoulders, and that's what you want to see at the bottom of a downtrend. So if we go to a downtrend, this is what an inverted head and shoulders looks like. Wait, I've drawn it up completely wrong. Low, 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 high. Yeah, there we go. Right. In this scenario here, you've kind of got your left shoulder, the head, the right shoulder, higher high, breaking all of these highs, making a higher low, and then continuing back to the upside. So that's what an inverted head and shoulders looks like. And all I've seen here basically at this point of time in the market is a head and shoulders form, whereas previously we have not had a head and shoulders. We didn't have a head and shoulders. We didn't have a head and shoulders here, 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 or here. This is not a valid head. I mean, it's technically high, higher, low, higher, high, lower, low, lower, high, technically, but it's not clean. I mean, it is, yeah, it's not that clean to be honest whatsoever, but it did give you that reaction and so on. I mean, you don't see head and shoulders here, you don't see head and shoulders here, not here. Here you see it. Notice there you had clean, clean, push to the upside, draw it out. Roll. Boom, 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 boom. Break, retest, continuation. Level of supply. I even broke this down with you guys in the that market breakdown as well. If you check Friday, 3rd of Jan, so 5th of January, any recording I've sent there, I would have broken this trade down because I just remember it off memory. And yeah, basically, it hadn't been, present ever since, way down here, which is all the way down in the start of January. So almost exactly a month later, we've come and formed a very, very clean head and shoulders pattern right here. Okay. Head and shoulders pattern with a push to the downside on the 30-minute. If you go down to the 1 hour, you've got an impulsive bearish candle right here, breaking two levels of structure to the downside. Now, obviously, we had the PMI over here on the 5th of February, which pushed the market to the all-time highs. Since then, the market made a little bit of had less volume. Exactly, Thomas. Yeah, there's an inverted head and shoulders before a massive drive up. Exactly. And that's, if you go back to that time, we also did a breakdown around that time, and I called a buyout there, which went on for like 5,000 pips, just crazy. Anyway, what we've got here is that push to the downside, breaking multiple lows over here. Okay, this push right here. Now, a lot of the times when the market is flying to all-time highs, any pullbacks that it does, usually even after breaking structure, you'll see that the market can do something like this, which is fine. Like that happens, especially at all-time highs when you're trading against the trend. When you're trading, against the 4 hour, the daily strong trend, which is super bullish, and they're trying to short it, don't be surprised if the market just takes you out like this. It's happened multiple times, right? I mean, most people would have thought, oh, there's a break of structure here of these two lows. The market's broken these lows on the 30-minute and it's closed below, right? And all this, in fact, it's done a Fibonacci long from this low right here to this high right here. It's built equal lows here, which is liquidity. It's come down, it's grabbed the liquidity. You could argue not really, it's filled out the FEG there, but it's come down, made a retracement, and turtle soup, whatever you guys want to call it, and it's gone and taken the market to the upside. But this is very different to what we have over here, and I'm sure you can see why already. Now, when I saw this, obviously I was just waiting for the market to retrace. We go down to the 15. This is what I was looking at mainly. I've said this multiple times, how 15 is usually my entry time frame. As we forward this on, what I was looking at, and I sent this out to my free Telegram, and I sent it out to DTI, I think, as well. But I said to you guys specifically, if we can remain, you guys can literally scroll up and see the analysis yourself. I said, if we can remain below 2870, which was exactly this level over here, if we can remain like, as in not close above, so stay below this area here, or close under, I have a spins is funny, right? Anyway, so I'm just reading the chat. Sorry, guys. I'm making sure I've not missed anything. Yeah, okay, cool. So, like I said, yeah, 2870 was an area which was a previous high. Fibonacci from this high to this low. Sorry, no, it was this from this high. Sorry, because this was the last ultimate high before this drop low. So I wanted to put my stops above this previous high because if the market actually comes up and like goes here, there's a very, very high probability that we are incorrect, right? And if I'd done my Fibonacci from here, for example, and put my stop loss just there would have been a much higher potential for the market to go ahead and take us out. Now, on top of this, what did I do? If you guys paid attention to my analysis in the Telegram, you would have seen that I drew some trend lines. Right now, obviously, if you guys know Adam, I wouldn't look for a trade at the neckline. And I'll give you a few reasons why for a second. Because if you just look carefully, it was already retested over here. And yeah, it did give you a little drop straight away, but I'm looking for the bigger move, which you will see after usually liquidity is taken out. So going back to the point, what we've got here was, oh yeah, this a potential tighter stop loss, which is not something I like to have. So anyway, I've entered with a trade right here. I believe FOM, not FOMC, what news was it now? Interest rates or unemployment change, something was out here. I remember. I can't remember, but let's have a look to see what would have happened if I had my stops there. I think the stops would have just survived. Yeah, it did survive. Okay, but to be honest, I had my stops initially above here to be on the safe side. Then I brought it down to just here once I saw the market pushing strongly to the downside. So we go down to the 5 minute. You can see a bit more of a little structure shift over here, a little break of structure right there, a little retrace back into this area here. And then at this point here, I've just let my trade run now. My initial take profit were these lows here because especially when you're this bullish, you don't know whether or not the market is going to break these lows. What you can confidently assume or expect is since the market's made this higher high, higher low, higher high, higher low, lower high, lower low, it's then for it to make a lower high and then an equal low potentially. And again, just to continue with what I was talking about regarding trend lines, I drew a little trend line from here to here, I believe. I can't remember where I drew it again. Oh yeah, I think it was from this one. I think it was from here. Yeah, it was. It's from here because I saw the market had tapped this area once, twice, 3 times there. And then we drew a trend line from this high here. And I think we did it like this. Yeah, it was like this basically. We were a little bit off, I think, with the area. Yeah, I think we were. But it was basically something like this, right? But I just did that for visual purpose. I don't rely on trend lines whatsoever. It's just kind of like a diagonal support and resistance, you can say, right? It's not exactly a thing I just strictly take trades off whatsoever. It's just to build up extra confidence so you can visually see the channels you're breaking, the channels you're respecting, and just kind of like, again, like a diagonal support and resistance play. So I've done that Fibonacci retracement, and more to the point, what do you see here? I speak about this in almost all of my like successful trades that I have. You've got a level of imbalance right there. If you go down to the 30-minute time frame, you can see this mass clean level of supply right there. So this is like an order block you could have taken a trade off, whatever you want to call it. Simple thing right here. Notice how I don't take a trade specifically off an order block because you would have been stopped out, right? I've simply taken trades off structural swings, okay? So that's the lower low. I'm trying to catch price at the lower high, and I'm trying to sell at the highest point of the lower high, right? I'm not just selling around here just because I know it's going to make a lower high. I'm trying to get the best risk to reward by selling as close as possible to the top of the lower high. Put my stops in an area where the market could be invalid if it was to go there. And then again, targeted this low, but then waited for the market to give me a little bit more of an indication as to where it's going to go, which I'm going to show you in a second. I think it was also 15-minute not moving average, 30-minute moving average. Let me just check the chat. Roughly, no, it doesn't matter if I didn't know if unemployment claims because I was already in profit by this point, I think. And also, I've told you guys before in regards to news and red folder, when you're taking trades at points of liquidity or in line with those red folder news events, that's where you'll see a lot of manipulation. So if you're catching trades around those Fibonacci OTE levels, 61.8 and so on, that's where you're going to see a little bit of volume. Now, you might get stopped out, of course, but more times than not, with my strategy, I've seen that the market is a lot more favorable with my strategy during red folder news events. So at this point here, I've just seen the market push strongly into my profit, and I'll just simply let the trade run. And again, you can see the market smash in, take profit. Took profits around here the moment we start to reject this moving average on the 30-minute. And that was my take profit idea. And if we just line this up with Fibonacci, you can see we came all the way down to the minus 61.8 extension level. And very simply, yeah, you had a clean rejection off there now. Yeah, Josh, you're saying that the supply zone was valid since I had an imbalance. Yep, it definitely was. It's just the fact that I wouldn't take a trade solely off that, because if I was to, then yeah, I could have definitely had, you know, a stop out on that potentially. So I just went off a structural swing point right here. Um, and I don't know what footprint charts do in regards to in general. Like I don't know what they do, but I don't know what it does with for Forex or gold. But I think they're usually for futures. I'm not too sure. So I just strictly rely on price action, structure, and this was the one occasion. Again, yeah, correct, Mario. So appreciate that. But this was, yeah, like I said, a scenario that had not occurred. If we just see this right here, this was over here, a piece of price action, let's call it a structure of price, a piece of price action that had not occurred in the previous higher highs. Higher high, no head and shoulders. Higher high, no head and shoulders. Higher high, mini head and shoulders, but nothing clean. Higher high, no head and shoulders. Look, no structural shift. No, it's not all about head and shoulders. It's just about structural shifts and the volume of price, right? Because you've had multiple breaks of structure before, but were they impulsive enough, right? This right here, this break to the downside was very clean, and the correction was even cleaner. That's one major thing that I did like. That I did like. Um, and yeah, if we go all the way back, I've even had this marked up. I sent this in the DTI channel and also in the free Telegram of the before and after of this. This was an example of an inverted head and shoulders that we called. And literally from this literally price point, we never ever came back, which is insane. So 26.67. And now we're all the way up at 28.70s or 60s now. So that was the breakdown of the 15K trade, which I've now got locked in for a payout. I just need to do like 3 more trading days, minimum trading days, and I should secure that payout. I'll keep you guys updated. In the meantime, I might take a couple more challenges, or I might, again, like I said, look into futures, see if I can do anything in there. But yeah, that's that. Quick Q&A, checking this right now. I can't hold trades that long. How do you let the trade run? For example, worry about the price going back to your entry point. So it's about having experience, and that just boils down to having um, consistent journaled data in regards to your performance. Have you seen before that? Because there used to be times, believe it or not, when I first started in my first year of trading, I was hitting trades like this with the craziest sniper entries. Honestly, that's where I got my name from. But I was closing trades like no joke, like this, right? I didn't know. Like when I first started, this was in the first month or two. This was like the trades that I was closing out. I literally, like when I first started, obviously I didn't have a clue about risk management, but I was taking trades like this. I was catching amazing sniper entries, just closing for the P&L. So that was the lesson that taught me. But again, when you have data, when you have a win rate and a risk to reward, after hundreds of trades, you'll know, when to take a profit, what usually happens when you take a trade like this, and what to expect. There'll be times where I take trades at this equal low and I see price blast past my, previous low. So on this occasion, I'll let the market run past and be a little bit more patient. But again, if you don't have if you're not comfortable with holding trades, you simply have to size down, or yeah, size down is the only thing I can go for, or keep going and learn the hard way. Both work. So that's pretty much that. So let's see what we're going for now. Let's close this off. So with gold right now, if you don't know, I usually like to look for shorts when we're at all-time highs, just because I like to catch the big drops, right? Because I don't like to buy when we're at all-time highs, even though it can be the easiest buys ever. It's definitely possible. I'm not saying, choose my preference over whatever you see comfortable, but it's just, again, like I said, my preference. So what we had yesterday or Friday, sorry, was NFP. Now, if we go down to the 4-hour time frame, what we can see is the NFP high went ahead and swept this previous high right here, right, and closed significantly below the previous ultimate high. Now, what I would like to see on the 1-hour time frame, realistically, and what I would expect is another big drop to come in, because I feel like we've been going up for so long, and at this point, there's not much you can do. When gold's at all-time highs and there's no data to the left, you can't do much except for, to an extent, somewhat predict or anticipate some moves. Still, I'm not predicting. I'm not just going off on predictions, You have to try and react, not predict. So based off what happens, we want to, make a reaction off that. But again, my anticipation would be the fact that the market can definitely fill in this sort of imbalanced region over here. Okay. And again, form almost like a double head and shoulder. So we've got a left shoulder here, potential head. We could get a right shoulder here. So if we do see the market, open up, it'll probably come down a little bit. If it can come up and reject from here, I would like to see something like this, like that, right? And then on the higher time frame, this would just look like a big double top. On the 4 hour, this would look like a big double top. So at this point now, I'm not only combining time frame analysis, but I'm also combining together chart patterns together. On one time frame, you might get head and shoulders. On another time frame, you might get a double top. But I'm just summarizing those words as, you know, a signal for either a bearish move or bearish trade idea or a bullish trade idea. It doesn't matter what you call them. You can go into intricacies of them, but I'm just giving you guys an idea of what to expect if we get, X, Y, and Z. So, so yeah, what we're looking at right here now is we definitely have a few key levels. I'm not going to mark them out right now because I do need a little bit more information right here. If we can get some significant breaks and retests, then that would strengthen, the key levels that I want to look at. So yeah, I mean the 15, let's have a look at the 15. I wouldn't even say this is, yeah, I mean actually it is. It definitely is a good clean break of structure, from this high to this low. And then you got these two lows over here resting. We did get a little break and a closure right there. We got a break of structure to the downside here. If we could get, let's see, the 30-minute. Yeah, so honestly, I think if we can get some sort of a retracement to the upside, honestly, if we can get some sort of retracement to the upside here at 28.74, 28.75, and we see some good rejections around here, similar to what we had over here, um, I wouldn't honestly mind shorting just for the idea of potentially catching a bigger push to the downside, right? Because if we look very closely, you've kind of broken this little piece of structure over here, disrespected this bullish level of demand. So I would like to see, yeah, realistically, a kind of break of the little channels. I mean, you can start drawing your trend lines on here at this point, seeing what kind of, structure we're in. But overall, yeah, I would like to see a little drop over here. However, if we start to do the rally above here, not show much rejection, then I would just wait for a simple break and retest of key levels like this to see if we can continue. But realistically, I'm probably not going to trade this week on one of my funded accounts because obviously I'm trying to lock that payout in. Unless this looks very, very, clean, I might take it and try and double down on my payout. But it just depends if we do get a move like this. So that's kind of my outlook on gold right now. Just keep an eye on those levels, 28.72 to 28.80 is kind of like the region where it's like if we can get some good rejections and confirmations, we could be in for a good impulsive move back down. Because don't forget, we've swept the highs, aka taking liquidity from any sellers up here, right? And we have broken below multiple levels of structure down over here at 28.61 and closed below. And if we can look, and if we just compare, if you compare the left side to the right side, you've got an impulsive move here, you've got sideways here. What does that show? That shows that the bears are in control potentially. So like impulsive, slow bullish, slow bullish, slow bullish, impulsive. That is something I would really like to see. But yeah, that's pretty much what I've got there for gold at the moment. Let me check the chat. What was your exit on that trade of the fib extension? No, it was once we broke that low and then we rejected off the moving average, it just also aligns, yeah, with the extension. Yeah, so with certain funded accounts, you have to have minimum trading days that you just place a few trades on just to confirm 5 days. The aim for the prop firm there is hoping that you lose profits on those remaining 4 days. But I think for the prop firm I'm with, it's only for the first payout, so it's not too bad. Um, let's have a look over here to see. what we can get for, can you check GU, US 13, US card? Let's see. I want to check Bitcoin because I had a, yeah, this is insane, guys. This is actually insane. Like if you were here for that webinar that we did on, if you check the 21st of January, no, Sunday, when was it? Yeah, like the 19th of January. No, it couldn't have been 19th. Oh yeah, Tuesday, yeah, it's 21st of January. It was the 21st of January. We took this, I gave this trade idea out for Bitcoin, expecting the short. Now everyone's saying, crypto's falling or whatever. And we literally called this short perfectly right here. Because what did I analyze? My favorite chart pattern. I might even make a YouTube video on this because of how powerful this is. But you got the left, the head, and the right. And this came, right after we went all the way up to these all-time highs, almost identical to what we've got on gold right now. We swept the all-time highs there on Bitcoin. We came down impulsively. We came back up correctively. And within this little right shoulder right here, which was a fib short from here to here, right at the level of the OTE, we had on the 5 minute, a 15 or 5 minute, we had a very, very clean entry signal right here, clean three-leg extension to the downside, market following bearish order flow. And if we confirm this with the Fibonacci from this point to this point, you could have even gotten away with a stop loss. No, you couldn't, just over here. I even said specifically to be on the safe side, you want to put your stop loss above these highs over here, which was, insane. I said to be conservative extremely, you don't want to put it up here. But notice how the market respected that, tried taking out, traders multiple times. And now, look, I mean, we're way down here now, which is absolutely insane. So right now I'm not looking at Bitcoin. This looks a bit ugly, I'll be honest. There's nothing clean about that whatsoever. Lower low, lower high, coming down correctively for a lower low. I reckon we could get an impulsive candle back down to the downside to this purple level at 90.6. And if it rejects, then yeah, we could go bullish again. So GJ, let me see what you guys want me to analyze. On your prime funded payout, did you manually trade? I did like 2 trades just manually. The rest was with the funded fast EA. But that was just mainly to secure the consistency factor because obviously they have lot size consistency and profit consistency. So I don't want to mess any of that up and I wanted to make sure it's all programmed in. Um, GU, okay, GU, I'll take GU. Okay, so just our first look with just our first glance with gold GU right now. What have we got? We have the market moving in a bearish trend on the daily. We've just had a one sec. Let's look at the daily candlestick. We've just had a rejection to the upside at a closure below. 4 hour. I don't like these gaps to be honest, but yeah, the gap we traded back above it, came lower, lower high. Again, almost a clean break of structure, bearish structure shift right here. High, 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 low, lower, low, filling the imbalance close to the downside. Honestly, it just looks super bearish right now. What I would like to see if I was going to take a trade on GU at this moment, it does look a bit annoying with all these wicks. But what I can see clearly is the market has traded and rejected off this intraday level of support and resistance. So I would definitely say we're overall bearish, and I can see the market basically falling down to into 1.23 450, let's just say, right? And if you do, you could look for another retracement to continue one or two more pushes back down to the downside. If you do, however, come up a little bit higher into here, I would also look to short. Yeah, that's pretty much it. As long as you remain below, sorry, 1.24500, or sorry, 1.24600. If you remain below that, you should still be bearish. So I want to look for rejections around there, engulfings on a smaller time frame. Take an entry, stop loss above the high, and if you can trail it down to down here, then perfect. So that's kind of my trade idea on GU for now. And that's pretty much it. But that's kind of my outlook on gold. That's what I like to see on gold. GU, let's see anything else. US 30, I'll check that. Oh yeah, yeah. The gap don't make much of a difference to be honest, but I'll check indices for you guys right now. Haven't done much analysis on this for a very long time. Um, okay, so again with US 30, we peaked up at, yeah, don't worry, I'm gonna post the recording in every channel I posted this link in. So yeah. We've peaked up at all-time highs over here. Go to the 4 hour. Gap again. Da, 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 da. Okay. Okay. So we're making higher highs, lower low, lower high, lower low. The thing is, I would like to see the market do something like this, and then that, and then that. The only problem is I don't like the market is has done an impulsive candle, then straight away a retest wick, and then continuation in a very slow, ugly manner. So realistically, on the 30-minute, we have come into this area here of potential support. So you could get a little bounce play off this area here, off 44,200. Okay, if we come a little bit lower, like a retracement play. Okay, we are definitely like we're overall bullish, but on the short term, we can continue trying to trade the bearish trend. So what we've got here is a lower low, lower high, lower low, lower high, lower low, lower high. Yeah, so to continue this trend, you could just go down to the 5 minute, see if we can fill in this sort of fair value gap imbalance right here. Okay, if we can come into this region here at maybe 44,400 and above and reject from there, we can get maybe something like this. That would be continuing the trend, in all honesty, and the trade idea could look something like this. Again, it only makes a 1 to 1.5 at the bare minimum, but it could continue with the high time frame momentum. It can continue a little bit lower, so you could look to trail that. But if you come into 44,200, I would just be wary of any bounce plays going up. Okay, so that's what I'd be on the lookout for. Um, if we do something like that. I'm just gonna, yeah, we're gonna go back into some questions. Um, Let me just check the questions over here now, because I think that's pretty much everything summed up pretty well. Yeah, I just got funded. What do you think should be your mindset to keep the account? However you pass the challenge, try and keep the same consistency. Don't switch up anything that you're not used to. Don't try new strategies out. Just stick to what you're used to, and yeah, you should be fine. Yeah, you'll definitely try and get there in a short amount, not trying to gain too much, but you're on the easy part. No, not the easy part, you're on the important part now, the part where it's the most worth it. So don't, be experimenting new things and don't be trying to play around with, yeah, just new things. Stick to what you know best and continue. Do you have your video course in your paid ICT Discord? Yep. Wahid, we have the full course from my old academy and ongoing webinars, any new sort of stuff that we posted in there, it's all there. Um, yeah, and let me read the chat and scroll up. Yeah, I got a 2.6K payout just the other day with Prime. So it's good that they're paying out. Obviously, they're one of the HFT firms, so they are going to um, they're going to be quite slow with certain things, but I do know that a lot of people try to like take advantage of these type of uh firms. So that's just one thing to keep in mind. Putting access signing up, no discontinued extra support. Just email the team again, you should get a reply. Um, how much backtesting did you do when you first started? So one thing that I want you guys to pay attention to and understand is backtesting is not going to get you as far as you think. Backtesting is very good for pattern recognition and seeing like we did here. We did a backtest on this head and shoulders move right here, and we saw this played out. So seeing that again, maybe with the criteria we explained, that's when backtesting is going to be useful. But please, guys, don't get attached to backtesting. That's not where money is made with this business, with this line of work, with this game. You can only make money in the live stage. There's no two ways about it. There's no way to like hack that. Um, Really, there's just as simple as that. Backtest to find out an edge, to test your system, to get data on a system, maybe, oh, the average risk reward is this when the market is in this condition. The bearish trade ideas are sometimes better than have a win rate of X. The bullish trade ideas of this setup have a win rate of that. When you collect data and you journal and you can see this type of data and after backtesting, that's when you're going to see the most that's where you're going to see the most results, really. Do you pass challenges on behalf of clients? Yeah. Me and my team funded fast, they take care of all that. So just message them. But mainly I'm just trying to focus on my own trading at the moment and just trying to level that up. And again, if you guys have any more information regarding futures, things like that, I'm looking to get into it. I will do obviously my own research, but if you guys, willing to share any info about that, I'm all ears. Is 3 pairs too many to focus on? No, not at all. I focus on 1 pair at the moment, which is gold only. And as you can see that when I usually trade, I don't trade that often, but when I do, um, I usually take, good trades because I know when the market moves a certain way, when it doesn't, how many pips on average it moves in a day, in a week, um, what kind of price action to look at. When you do focus on 1 pair, you do tend to get a little bit more familiar with it, and that's what helps you long term. Having multiple pairs, like if you see on the right hand side of my screen right here, I used to have look GU, EU, gold, GJ, US30. I used to trade all of these pairs all at once at one point. If I didn't see a setup on GJ, I'd go to gold. If I didn't see a setup on gold, I'd go to GU. But that actually gets you in the mindset of over trading and trading one single pair, even though you might not catch a single trade in a whole like day or even in a week potentially. Usually on gold, you would usually catch 1 or 2 trades in a week on average. But if you don't, that's a good thing because trading multiple different pairs is just going to burn you out, right? And there's too many inconsistencies. Trading different pairs, different sessions, you're not going to find out which session usually works for you, what setup works for you. So for me, trading gold only and usually initially trading New York session was what helped me a lot. But again, you want to try and make it reasonable to the routine that you have. So maybe if you're working in the night or whatever it is, or if you're working during London and New York, then you might want to trade a little bit of Asia, to be honest, right? Just do whatever makes sense for you. And for me, Stefano, I usually trade like 2 to 3 times a week max. I don't really catch trades every single day, unless I see the market in a very good opportunity, in a good position, or if I have like multiple funded accounts I really want to take trades on. But more times than not, I try and lock in one payout on each account, wait for payout, and kind of go again. It works better for cash flow, it's better for your mind, and it keeps you a little bit away from the charts, which is a good thing. So that's pretty much that. Do you have any time to offer anyone to our mentorship? Just DM me on Instagram, Wahid, or message Funded Fast, and you can get access to anything, something like that. How many funded accounts do you have at the moment? 3. No, sorry, 2 plus 1, 3. Yeah, 3. But one of them is already restricted by 1%, which is FTMO. So that's pretty much that. One best advice to all traders. My best advice to you guys is to just simply not rush the process. It's a difficult process. It can be a long process, but it can also be a very short process. It just depends how you go about it. If you're always constantly focusing on the P&L without trying to, become a sniper, then you're just not gonna, it's gonna take you longer. For me, at one point, especially when starting off, I kind of accepted, like to begin with, I'm not going to make tens of thousands in a trade. I might not even make thousands. I might make a couple hundred, or even if that, I might make just tens of dollars right to begin with. So understanding and not trying to rush the process where you're trying to make $50,000 in a trade or $10,000 in a single trade when you're a complete beginner. And instead you want to focus on crafting the skill. When you accept that, okay, let me just, the $10,000 days waiting for you all there. It's literally, a few months away, potentially, maybe a year away, right? Potentially even a few weeks away, depending on how much intense effort you put into this craft right now. The thing you have to accept is not to rush the process. As simple as that. You need to just accept, like I said, not that you're going to get, these massive jackpot wins. You're just going to go ahead and slowly focus on the skill, catching those lower highs, catching those higher lows. buying when it's low, selling when it's high, right? Catching trades at the right time of day or in line with your sessions, exiting when it's appropriate to do so, not holding on for too long, not cutting it too short, right? Not over risking, not under risking. When you can craft your skill, when you can craft your um, performance to be skill related and performance related, right? Instead of P&L related, that's where you're going to see the biggest difference in your trading. Then once you sharpen that tool, once you sharpen your performance in catching those higher lows and catching those lower highs, right? Buying when it's low, selling when it's high. When you do it over and over again, and you've made multiple tens of dollars or multiple hundreds of dollars by doing that, or just got multiple wins by doing that, and you've got a clear log of that, that's when you're going to say to yourself, you know what? I know my skill. I know my edge. Now it's just about sizing up. So realistically, it's skill first, money second. That's the way to go about it. And that's what I did. I literally just went through that process of not rushing the process, and I just went ahead and focused on becoming a sniper, not a machine gun. Yeah, firing 1,000 different trades in a day. Now, don't get me wrong. There's certain traders out there on social media that will trade, 10 different assets or maybe two or three and take trades on the 1 minute time frame up and down, left and right, and good for them. But just think about the kind of mental stress they're taking on. And if they're not taking on, and if you don't think they're taking on mental stress, understand they've probably got 10 other sources of income, well, not even 10 other sources of income, maybe a few other sources of income that they're happy, accepting payments for, and they're just probably got another business on the side, whatever it is, and they've got the time to, play around with that type of money. But then there's the other type of people who just want to trade to live, and they don't want to live to trade, right? We don't personally, people like me, I'm assuming people like yourselves, you don't want to be glued to the screen all day and night, buy, sell, buy, sell, buy, sell. Like it's effort, it's stress, it's emotional energy. You want to be a sniper. You just want to sit back, find an opportunity. When it aligns, boom, you shoot. If it hits stop loss, it hits stop loss. But if you've practiced your skill enough, if you've back tested enough, forward tested enough, live tested enough, journaled enough, you'll snipe, you will hit, and then you will see that, money land in your account. And it'll be the most passive, seamless process ever. Like this trade alone made me $15,000 in one trade on my first day having the funded account. And now I don't have to trade for the next 2 weeks, right? Or for the next week, 1 week now, 1.5 weeks. That's potentially 12K payout locked in, right? And I can do that over multiple accounts right now. So this is the beauty of having trading less, winning more, and just crafting your skill in the meantime. So don't rush the process. Don't even rush into the live stage. If you want to forward test, you can test on a demo. Like for example, if the market comes up here now tonight, and you've already got a payout locked in, you don't have to take a trade on your live account. You can take it on a demo or whatever it is, or on a small personal, whatever it might be, just to test a little system out, whatever it might have to be, and see if it works, right? And you're not going to lose anything from that. You're not going to gain anything from that, but at least it's a bit of a experience booster. That's what another thing is. You want to get as much experience as you can under your belt. And I've said this on multiple podcasts. If you haven't watched them, I've done a podcast with Raul, with Words of Wisdom, loads of people. So watch that if you guys are more interested in my like mindset and things like that. If you want to take this game really serious, understand that. When you're a beginner, how did you approach on taking 3 challenges at once? I didn't take 3 challenges at once. I don't think ever. Yeah, I never did that. I always did one challenge at a time and had one funded account at once. After I got a payout, then I'd go for another account, usually. The funded fast link expired. You can go ahead and check the link in my description and in my bio on my Instagram, and you'll see it there. What do you think about Alex G? Honestly, I don't know. Like, I don't tune into traders like that anymore. I only watch Raul. Who else do I watch? That's it, to be honest. Honestly speaking, I only watch Raul on YouTube nowadays and my own videos. Let's see. Please can you kindly post your support email here. Whichever one's on the website, Wahid, you can just message them there. The daily habits affect trading? Yes, 100%. If you're definitely inconsistent outside of the charts, you'll be inconsistent on the charts as well. So keep a routine on and off the charts, and it will transfer into trading. It's fact. If you wake up at the same time every single day, eat at the right time, sleep at the right time, jump on the charts at the right time for a certain window, you will see consistency in your results, in your performance, and overall in your life as well, which is really good. But yeah, that's pretty much it, guys. I don't over make this too long. If you have any more questions, let me know. If you enjoyed this breakdown, let me know. If you're on Instagram or whatever, feel free to take a picture, whatever, tag me. I'll repost it. I'll be hosting a free breakdown only 1 or 2 times in a week. I'll do on a Sunday and probably on a Thursday. And then for DTI and my private group, I'll be doing it 4 times a week minimum, I think. So Sundays, Tuesdays, Thursdays, and maybe Fridays. So yeah. So yeah, that's pretty much it, guys. I'll keep you all posted with more trade ideas. How many times does it take you to pass first funded account? Depends on your experience, and depends all on that. How do we get into your private group? Just click the link in my Instagram bio. Just type in sniper ads, no underscores, no spaces, nothing like that. Don't get scammed by anybody else. That's another important thing. And description there. Appreciate you, Stefano. All right, guys. Appreciate you. Stop the recording. Let's stop it.